Good morning, ladies and gentlemen, all in crypto here, and welcome back, guys, for another YouTube video. Happy Monday, everybody. I hope you guys are starting the week off with a bang. I know I am. Today, we're going to be diving into our daily cryptocurrency market update, or certainly what should have been a daily cryptocurrency market update. Last week, had a lot going on with family, had family come to visit. It was very kind of hard to set aside the time in the mornings to get a daily update out, but we're back with a bang on the run up to Christmas this week. So what we're going to be doing in this video is we're going to take a look at the cryptocurrency market, red day as a whole. But the answers for why the market is really doing this lie in other markets and lie with what's currently taking place on the global stage. And that's what we're going to get into in this video. We're going to be doing everything from looking at some of our stock indicators or the stock market. Oil's also seen a slam down, and really this is all due to what we're currently seeing. We know the Netherlands entered a nationwide lockdown in wake of what's currently taking place over there. I mean, this is really gripping the headlines. Certainly in the UK, it's causing havoc. UK reports 82,886 new cases. We see over here a lot more tighter travel restrictions are taking place. And we also have got news from South Africa where we actually I think it's like a 90-something% drop in hospitalizations due to the current thing that's circulating. So there's lots of conflicting data, some good, some bad, but ultimately all of these restrictions, all of the kind of scarcity or scare that we're seeing in the market, of course, is playing, or not in the market, sorry, scare that we're seeing on the global stage is all having an impact on the markets. And you can see that very clearly illustrated with how the FTSE, the top 100 stocks in the UK, opened. Lots of travel and leisure within this. You can see that was a really, since the market open, really substantial dip. Certainly, I mean, we're talking 1.9% here. But in the traditional world, you know, that's quite significant, certainly for it to open in that sort of a manner. Oil as well, seeing a bit of a smash down, but we are seeing a buyback, you know, and this is really how I think markets move from now on. I don't think they can allow markets to crash. There's lots of people talking about, you know, a new recession, a major crash taking place. I'm pretty certain, and I can never be that certain on this, but if you look at what happened in March 2020, that should have been the crash. And look what followed after. That wasn't just for Bitcoin, that was for stocks across the board. You know, they have a tool in their arsenal called QE, quantitative easing, printing money, where they stimulate the economy that will kind of combat any kind of an economic downturn. They can or artificially prop things up. So that's really why we're seeing a downturn in our market. Of course, remember, our market is a lot higher beta, still very tethered to the traditional world. Crypto is an extremely risky asset, ladies and gentlemen. And in times of risk, people will risk off. They'll take their risky assets off the table. People will take profits for Christmas, so on and so forth. So there's a plethora of things taking place at the moment. What I want to do, and we are going to get into Ethereum, Cardano, and Bitcoin, just take a look at the charts and see where we're at. We're also going to take a look, and this is very interesting, at the total market cap, and underneath we have the total 2, which is the total market cap excluding Bitcoin. So this is the entire market cap of crypto. This is the entire market cap of the altcoins. And I want to do something from top to bottom. We're 29% down, including Bitcoin, in our market cap. And if we take a look at the total 2, which is just altcoins, we're only 24% down. So it actually appears that the altcoin market is holding up better than Bitcoin. Now, that doesn't apply to every altcoin. I bought altcoins before we did this dip. Some of them have halved and even gone down 60+%. Some of my small speculative altcoins, which is fine. You know the risk when you get involved with speculative plays. But it does show that the altcoin market is actually seeming to hold up better than and retain market cap better than Bitcoin. So that might be telling and interesting. Let's get into some interesting data to kind of put everybody's mind at ease. Let's start over here with Glassnode, and this is the Bitcoin miner unspent supply. Bitcoin miner unspent supply is currently sitting just 500 BTC below all-time high. These coins are issued to miners as a reward for solving a block, but have never been spent on chain. Miners started hodling significantly more BTC since March 2020. So what does this mean? Well, miners aren't willing to sell at these prices. Now it says something. You know, a lot of the largest sellers are actually miners, and we can see that miners are actually hodling significantly more since March 2020. So is the belief in Bitcoin now gone up? You know, are these miners more confident that they're going to get a higher price down the line? Interesting data. All the on-chain data is exceptionally interesting. We'll move on to this one over here. Now, this is interesting. The last time, this is from Willy Woo, the last time retail bought the dip this hard was at the bottom of the something crash. Probably nothing, few, etc., etc. So you can see retail bought very hard here back in March 2020. And you saw a similar level of buying where we currently are today. Well, this article is a little bit later. So even though we've seen retail buy significantly, we've continued to sell off. This article was about 6 days ago. So let's take a little look at Bitcoin and see what the price has done 6 days ago. So we can see we've actually still continued to sell off despite retail coming in hard. So do we have institutions at play here? Is this institutional selling whilst we've got retail buying going on? Who knows? We'll get into that a little bit more as we go through this. This is Bitcoin Purpose Bitcoin ETF holdings. Now, this couples with a number of things, such as the fact that we are still seeing people such as Michael Saylor and a number of other ETFs continue to add to their Bitcoin position, to continue to buy Bitcoin and hold it. The Canadian Bitcoin Purpose ETF has added 6,341 BTC in assets under management since the 69k all-time high. This represents an increase of 26.2% in coin holdings, even whilst price drawbacks over 34% in that time. So we're still seeing Bitcoin get taken off the table and locked into some of these bodies, some of these vehicles like ETFs. This is just the Canadian ETF. There are plenty of other ETFs out there that are doing the same thing. Plenty of other funds like Grayscale, CoinShare, so on and so forth, that are still seeing largely inflows and not outflows despite all the current market conditions. Another article here, this is the mining difficulty. We're going to move on to something interesting after this that suggests China may, and certainly the Asian markets, are probably what's causing a lot of this downturn. So let's get into Bitcoin mining difficulty is just 3.5% off all-time highs, and this is since China essentially came out and banned Bitcoin mining. You can see the huge drop that we had there, and we're almost back to where we were. So not only is the network getting back to the strength that it was previously, but it's massively decentralized in terms of hash power, moving away from China and these big Chinese mining companies and kind of spreading themselves throughout the world. The US is really catching up with that kind of mining race. And could this also be correlated? You know, was it a lot of the Chinese miners that potentially were selling their Bitcoin? And now that we have people in the US, we have people in the Western world, we have people in all over the world, not just the Western world, mining. Are they hodling more in anticipation and in anticipation that the price is going to continue to move up? Next thing I want to jump into, then we're going to get into the charts. So just quickly to recap, because I know this is dragging on a little bit, this video. You know, we've got all this kind of scared news floating around in the world. We've got the new variant, which is causing havoc, but at the same time not. And there's a lot of uncertainty, and this is getting taken out on the markets. We see that in the crypto space. We can see that in the stock market. We can see that in things like oil. The S&P hasn't opened yet, and even the dollar saw a little bit of a downward day today. But ultimately, you know, found beautiful support off your 20 EMA on your daily. And the dollar, in comparison certainly with other currencies like the Turkish lira, which we've covered, is going to start gaining strength. So we'll see how this affects Bitcoin. The last little bit of Twitter thread I want to show you is consolidation phase comparison. And you can see this 2013 cycle. This is 2017 cycle. And this is obviously 2021 cycle. The reason for current extended sell-off short thread. Asia's largest exchange, Huobi, has stopped related trading in China. Bitcoin has been flowing from Asia to the US and Europe for some time. And it gets into a number of things. Essentially, it's blaming the kind of crackdown on cryptocurrencies within China for the sell-off. People are moving their coins about, or they're just straight off selling them in anticipation that there's going to be harsh penalties for holding it. Asia MOM, change month on month, change in Bitcoin price, 30-day change in Bitcoin price during Asia's working hours. Some insight from Glassnode's engine room, breaking down Bitcoin price movement by working hours reveals an unprecedented amount of selling from Asia as force behind the current downturn. Huge amounts of sell-offs here, ladies and gentlemen. So you can see they are definitely playing a role. When we look at a chart, we're looking at candles, but there's an entire backstory to why this chart looks the way that it does. There's TA thrown in there. There's a plethora of things to take into account when you're looking at this chart. And you know, this is just one, and some of these factors are a few of what's taking place. There's lots going on at once. There's ultimately one major catalyst, but then there's like, you know, for example, a major catalyst could cause a sell-off, that could then cause liquidation, that could then cause uncertainty in this area and that area, and you know, everything kind of ties in nicely. But the main takeaway is there's still a lot of uncertainty in markets. This, of course, is all playing a role. For me, I would say the new variant, the fears of that, the fears of uncertain monetary policy, even though they've set out interest rate hikes. We've seen the Bank of England have already done it. The European Central Bank are going to follow. You know, there's still uncertainty surrounding that, because if this new variant becomes something more than they're anticipating and we have to lock down again, that has a huge impact on the economy, and that will force them to print more money. This is all good for Bitcoin, bad for people, so on and so forth. Let's jump into the next thread of this, guys. US month-on-month change in Bitcoin, 30 days. So you can see the US upticking whilst China is down-ticking. The silver lining: first, US and EU keep buying, and secondly, Asia selling seems to be decelerating. So typically when, for example, you have news that something's getting banned in a country, or China are cracking down on it, there'll be a lot of selling, and then it will anticipate, and that sell pressure will wane. And perhaps we're seeing that in the charts. I mean, if we look, you know, the sell pressure is certainly getting these big wicks, and then we see a lot of exhaustion in the pressure, and we see big buybacks coming on. And we did say, since we essentially made this wick here, this was likely, this kind of a consolidation, falling wedge structure like we've seen previously was quite likely to take place for Bitcoin. So that's really the bulk of what I have for you. Uniswap V3 contracts deployed on Polygon, approved with a 99.3% consensus. So the Uniswap governance token holders essentially voted on running V3, their version 3, on Polygon. It makes sense. The Uniswap fees are insanity. We're seeing a mass migration from Ethereum, the base layer, to these layer 2s. And the reason being is because Ethereum is just completely failed, in my opinion, on the scaling side of things. And we're having to see private cryptocurrencies that aren't associated necessarily with Ethereum take over and take that strain off them. So it's interesting what's taking place there. That being said, Ethereum's actually doing very well on the charts. I mean, people calling for a bear market, come on. 22% down. Look at that chart, ladies and gentlemen. Doesn't look like we're entering a bear market to me. You know, that it's complete fortune telling that we're just going to drop off and enter a bear market here. Certainly the same scenario for Bitcoin, still putting in higher highs and higher lows. You guys know that I think we're in this kind of rising ascending triangle that ultimately I think we're going to break out to the upside of, much the same as what we did after the March 2020 crash, and then we kind of consolidated. We saw the same thing take place that we're seeing here. Cardano. Something huge is around the corner for ADA. You guys know I'm a huge fan of ADA. There's a few things that I think might be in play, but we're going to talk about those in another video. Maybe some sort of a megaphone. Ultimately, I'm not a big fan that we keep coming down. We'll get rid of this for the time being, and hitting our head on the kind of $1.20 range. This is obviously acting as support, but the issue that you've got is if you keep coming down to it, you form a bit of a descending triangle where you're ultimately seeing, you know, your resistance move down, and eventually it kind of brings you into an apex where you have to make a decision whether you break to the upside or the downside. Typically these will break to the downside, but the thing is with Cardano, when you understand what's on the horizon, you look at some of your coins like Avalanche, you look at some of your coins like Terra, Solana, they've all done very well due to their smart contracts and the kind of hype surrounding it. Cardano is about to have that moment. I mean, they're on the very cusp of it with Sunday Swap launching any day now, certainly launching mainnet. You know, this is really the start of a ecosystem that I think is going to be very heavily adopted, more so than other ecosystems, other than Ethereum, of course, because it was first, because we've already seen that the community behind ADA is undeniably strong. So a quick recap, guys. Markets are seeing uncertainty. We're in the same boat that we have been previously. We know that countries are locking down across the world. There's still a lot of uncertainty on how the new variant is going to impact everything. On top of that, we have interest rate changes, which of course take liquidity from markets. The Fed reeling back their bond buybacks and starting to taper, so on and so forth. We can see this is playing havoc in the traditional finance world. I mean, but look how beautifully the FTSE is getting eaten up, ladies and gentlemen. And, you know, of course, that's going to echo over into our small, but still significant cryptocurrency space at $2.1 trillion. All I have for you in this video, guys, I'm going to love and leave you on that note. If you enjoyed the content, like is always appreciated. So is a comment, and I'll catch you all in the next YouTube video.